I have pulled in multiple five figures from prop firms and I've documented this whole journey on my X profile. In today's video, I'm going to be teaching you how I accomplished that by simplifying working concepts. I took these concepts that people throw around online, I debunked them, and I made it easy for myself to understand. I created a logic that makes sense to me and myself, and I'm now going to share it with you for completely free throughout this whole series so you guys can go and replicate these results for yourself. So, without wasting any more time, welcome to episode 1 of the profiling series. And in today's episode, we're going to be touching on how I formulate a weekly bias through profiling. So, what is profiling? Profiling is understanding how a draw on liquidity should be delivered to, understanding how to qualify and validate this, and understanding how a weekly candle, or any candle for that matter, should form. So let's get started with the weekly context. Now, it's very important that we build the context around the weekly candle. So in order to do this, we must view the weekly candle as a component of the monthly candle, right? We understand a monthly candle consists of 4 weekly candles, and one weekly candle is simply 25% of that candle. So if we can understand where that monthly candle is heading to, and then identify what phase of price we are in within that monthly candle, that gives us a whole week of bias. So by utilizing the monthly candle direction and the dividers that I'm going to show you guys, and then understanding the phase of price, we can then reference some sort of market maker model or accumulation, manipulation, distribution model to then formulate how the weekly should print. Okay, so that's enough waffling from myself. Hopefully, you now understand what this episode entails, and this is all ingrained into your head. If you do not understand this, please rewatch the first bit, otherwise, you're not going to understand the rest of the video. But let's go straight into the first profile, the classic expansion profile. Now, in this example, this is a monthly chart, and we want to understand how this current white bullish candle is printing. Now, the characteristics of a classic expansion candle. So, ideally, the previous month anchors a high or low, which primes expansion, or the current month opens close to a higher time frame level and forms that protraction phase, creating the wick of the current monthly candle very early on. Now, with this sort of profile, we need to reference a market maker model framework external to the current month. Now, what do I mean by that? So it's going to be external to the month's price action, right? So we'll be referencing the previous months and perhaps even the months prior to understand which buy or sell model is being referenced. And in addition to this, we can expect a short protraction, a short manipulation phase of the current monthly candle. Okay, so back to that monthly chart example, here it is. I want you to have a good look of it. So the previous month closes outside of that higher time frame level, showing a nice rejection. And then the current month opens with a very short wick and expands bullish. But now let's go and have a look at how that forms on the 4 hour chart. Now on the 4 hour chart, I want you to section price with vertical dividers. Now you might think, oh, I don't need to do this. Trust me, you do, right? It's going to help you visualize price way better because you understand what you are actually trading and you understand how to isolate price action, right? So what you can see here is this is the 4 hour chart, and I have anchored the dividers in a way that each section represents 1 week and we have 4 weeks, right? Concluding the whole month. Now at the bottom, you can see I've anchored out the previous month and the current month's trading range. So as you can see, this orange line is the open of the current month. So what happens is the previous month trades into some sort of higher time frame level, the one that we outlined earlier, right? That imbalance, the inefficiency, whatever you want to call it. And then we begin to displace higher. So once that low has been set and price is poised to expand, it's ready to leave, the current month opens, retraces, forms a very shallow low beneath the opening price, and then we begin to facilitate that distribution to the upside. And what is the target? External to the monthly range, the current month, we have the previous month's high, which actually formulates a market maker buy model. If you train your eyes accordingly, you can see this is a very clear market maker model. And that is what I mean by referencing price external to the current range, right? So again, just to repeat, we have the current month at the bottom, denoted by that blue box. And then to the left of that, we have the previous month denoted by the gray box, right? You can see the current month price trades towards whatever price action is referenced in the previous month, right? Because we understand that low has already been put in, it's already been anchored. So for this month, we expect a very quick distribution to the upside. So what I'm actually going to do now is I'm going to take this case study and I'm going to go through it on the actual charts on TradingView so you can understand my thought process behind it. Okay, so here we are on the chart, and this is the example of the classic expansion profile. Now, I'm just going to walk through my whole thought process. I'm going to try to understand what I see when I'm analyzing the markets in real time. So if you see here, we have this monthly fair value gap, the same one we outlined on the slides. Now, once price has traded into this level, we want to see if this is actually going to facilitate buys or if this is simply just going to be a level of resistance before trading lower, right? If price is just going to struggle around this area and then we sell lower and get beneath it. So you can see the monthly does actually close the March candle, and what happens is we want to focus on trading April. Now, given that March has closed with a nice wick to the downside and we're showing some nice rejection, this is already setting up a framework to trade the next monthly candle higher. But we want to validate that via profiling, right? If you remember, I showed you guys that the whole point of profiling is to validate our draws on liquidity, right? So if we have this previous month's high here as our draw on liquidity, that's absolutely fine. But we might have the previous month's low as well, depending on how you're seeing this market, right? I can't teach you how to view a market. Everyone is going to see it differently. I can teach you the concepts, but at the end of the day, I can't teach you how you visualize the markets. So if you see here, we are trading from this discounted level. Now, immediately, my eye personally draws to the previous month's high, given that this is a nice bullish leg, inefficiency, nice rejection, and we failed to close inside of this level. Now, let's validate that on the profiling time frame, which is the 4-hour time frame. Now, by understanding if the 4-hour agrees and if we can profile the monthly, that gives us multiple weeks of bias, which then leads to multiple days of bias, or can also lead to higher risk to reward trades, right? Because you can hold and swing your trades for much larger targets. Now, here we are on the 4-hour, and this is how the monthly candle forms. So this is week one, week two, three, and four. Now, given that the previous month already trades into our level, right? If you look at the bottom, this is still the previous month, all the way up until this candle here, and this is the new monthly open, right? The month of April. I encourage you to go to this specific case study yourself and go and view this piece of price action. Maybe you understand it better than me, and maybe you don't understand it, right? And you're coming back to this video to reference what I'm saying to help you and increase your understanding. These are the sort of activities you need to do to develop as a trader and to understand this episode and how I'm going to teach you in the following episodes. So, coming back to this, what we know is that the previous month has actually anchored a low here, right? You can see we run a short-term local low and then we get a nice immediate displacement higher. And we also get this change in state of delivery. Okay. But to be honest, this isn't the most important thing here. This is not what I'm focusing on. I don't really care about, we closed above some down candles, right? I do use this concept, but in terms of profiling, it's not that important. So we get the change in state of delivery anyways, and we print the new month open. Now, if you remember the characteristics I told you guys, for a classic expansion week, there must be a market maker model to reference. And if you look here, this is a very clear consolidation. If we mark this in a nice green, what you can see is we have an original consolidation and the run lower into our key level, right? The monthly fair value gap. We then print that smart money reversal in the previous month. Okay, these are all the characteristics beginning to align. And then we have the monthly open. What happens? We trade higher, then we get a retracement, a nice short protraction beneath that monthly opening price, and then we begin to trade above again. Now, once we protract beneath into a discount, this is your first opportunity to buy and to align with price on the lower time frame. Now, in today's episode, I'm not going to be teaching you how to align on an intraday basis. Those episodes are going to come later on in the series. We are strictly focusing on the weekly bias, right? So you can see here, this actually happens on Thursday, right? So even if you let the beginning of the week play out, what happens is on Thursday, you get a very nice clear bias to long, and you may even get that on the Friday as well, right? Uh, okay, no, it doesn't happen. Friday is just a nice retracement, right? This is just very choppy price action in these 4 hour candles. So then what happens the following week? Monday immediately rips higher, right? And we clear a short term objective, this local high. Now, following this high, we can expect a new phase of price, right? We get a consolidation, which then leads to a manipulation beneath Monday's low. But we understand the longer term objective is these highs. So when we're seeing runs lower like this, we should be viewing these simply as a level of manipulation to trade higher. We are going to fade this, right? This is not a market structure shift. This is not a change in state of delivery. This is just ugly price action. Simply accumulation, manipulation, and now we expect distribution to the upside. And what does that give you? A whole week's worth of bias. Now, if we play this out even more, we don't actually reach the final target in this week. So the next week opens, and what do we have? We have Monday, right? But what we need to understand is we have run, these levels of buy side liquidity. So we can expect, some sort of choppiness or retracement, a new phase of price. So we get that, right? You can see price is clearly exhausted here. We don't have that same level of expansion that we had here. Nice voluminous candles versus these ones, right? You can see price is clearly exhausted. So what happens? We then begin to retrace. We get a new level of manipulation. We sweep lows. Now, is this a market structure shift to now sell the market? No, because we understand through profiling that these highs are the draw on liquidity. So if you play this out, that gives you another day of bias, right? Monday plays out. And then from here, if you have more draws to the left, you can target that, which we do, right? We have very clear, obvious draws, clear highs, buy side liquidity, multiple failure swings to target. But for simplicity's sake, we're just focusing on that previous month's high. So that is a very quick walkthrough of how you can profile one monthly candle into multiple weeks of bias. Now I'm going to give you a little snippet of what that would look like on an intraday basis, right? But we're not going to dive too deep into this. You can see here on an intraday basis, you will then add intraday profiling, right? So this is that final week that delivers to the draw on liquidity. You can see market opens and gaps lower, right? It reaches a level of manipulation and begins to expand. This is where you'd profile the day as an Asia low of the day. And what happens is we trade away from that Asia low of the day, and London and New York both expand to the draws on liquidity. Now, don't overwhelm or confuse yourself just yet. I am going to touch on these profiles in the following episodes, and we are going to get into intraday profiling eventually. But for now, please just master these profiles because you can transpose them onto every other time frame also, and this is going to get very interesting and very technical. Okay, great. I've shown you the classic expansion profile, but that's not gonna happen every time, obviously. But neither is this one, right? I'm just giving you guys two simple frameworks that I use and that I think are very reliable. And by categorizing price into two profiles, you can then simplify your process and understand how price expands. So this is the mid candle reversal profile. Now, in this example, you can see price trades into a higher time frame level being an order block, right? That's all I'm going to see for now, and we're going to come back to this. So, what are the characteristics of the mid candle reversal? So, ideally, the current month trades into a key level to resume order flow. Okay, so the current month should open far from a higher time frame level, or have some sort of distance enough for the beginning of the month to protract into, and then that would begin the retracement phase. Okay, this might be overwhelming and confusing. Don't worry, we're going to show you an example. It's going to all make sense and you're going to make a shit ton of money. Now, the market maker framework that we use for this profile is going to be internal to the current month. What do I mean by this? So, the original consolidation that we will reference in a market maker buy model, for example, for this month, it will be created within this month. Okay, so the beginning of the month would usually create that original consolidation, trade lower, and then later on in the month, we trade towards that level of original consolidation and take it out. And this is different to the classic expansion, right? We have a prolonged protraction, okay? A deeper level of manipulation. Okay, so let's show you guys the example, but very quickly, back to this chart, reference the blue line, right? This is the order block, okay? Now on the 4 hour view, that same blue line is that higher time frame order block. So what happens? We have week 1, 2, 3, and 4 again, as outlined by our dividers, our magical dividers. This is why you need to use them. It helps isolating price action so much, right? It makes it so easy. I'm not going to keep going on about it. If you choose to skip this step, then I wish you the best of luck with profiling, but I think it will be a lot harder for you to understand. Okay, anyways, as you can see, we have that monthly opening price in orange, and what happens is weeks 1 to 3 start with immediate decline until week 3 hits that higher time frame level where the smart money reversal begins. We then get a displacement to the upside and a retracement, which allows the price to expand towards what? Back towards that monthly opening price where an original consolidation resides to complete that market maker buy model. And wow, isn't that just beautiful? You can simply frame the sell side or the manipulation and the buy side or the distribution of the market maker model of the curves so clearly through our dividers, right? You can see a very clear divide and where the distribution begins and where the manipulation started. And notice how we don't even care about anything external to this range, because with this framework, we only need to work within the range, okay? We understand the higher time frame order flow is bullish. We understand that the beginning of the month has declined. So we can profile this as what? Our midweek reversal. We don't care about anything external to the current monthly range. The current monthly range gives us enough data. It gives us enough targets, right? We can target week three's high. Once we get that, we can target week two's high, right? You can understand that you don't even need to swing all the way to these objectives. You can also take these low hanging fruit objectives on the buy side of the curve, right? On the way to that monthly opening price, on the way to that original consolidation. All of these small moves on the 4 hour chart breeds expansion on the lower time frame charts, right? A lot of opportunity in these very small moves. And then once again, just like we did earlier, I'm gonna take this exact case study onto the trading view charts and I'm gonna let you guys see my whole thought process behind this. All right, so back on the chart, and this is gold futures. Again, I encourage you to go and test this price action for yourself. This is February 2024. Now, like I said, these models don't always appear very textbook, but in my opinion, this is a very nice example. You will never have an exact picture perfect textbook example every single month, right? You need to be able to adapt and you need to be able to apply the logic and be flexible with it. Now, let's start with the naked chart. And what can we see? We are clearly in a range bound market. This is just a consolidation profile, right? Overall, in this monthly chart, there's not much going on, right? But that's irrelevant to us because we only care about what is happening on this month here. Obviously, we're going to use prior price action to help us build an idea of where price can head. But once you understand you are day trading or holding for the weekly range, you don't need to know where the whole monthly chart is going. You just need to know where this monthly candle could supposedly go, right? So again, all range bound, but that's fine. Let's try get some clarity out of this. If we utilize all of this as a level of accumulation, this run lower becomes a manipulation, and then we get a distribution to the upside. Now, usually we wouldn't want this much of a deep retracement. This tells us that this is likely to be a choppy market because we retrace very deep running this low. What I would have preferred was for price to run these highs and then facilitate a new phase of price being some sort of retracement or a consolidation. But the fact that we got close to the highs but failed to get above the rejection block and then traded lower, this automatically becomes a low probable environment. That's fine. But now let's focus on this piece of price action here, these series of candles. Okay. So what do we have? So again, we've run this low, right? This important low into this volume imbalance, right? This is a key level. We see literal gap in the market. I'm going to mark that out in blue and then we're going to carry on from here, right? So coming from this level, we begin to trade higher, get a nice expansion followed by a retracement phase. Now, in my opinion, this is a bullish market and we should run towards this high. We might not get there, but we should at least get into this candle's wick before we might struggle. Now, understanding that, I can then utilize this key level as a level for price to trade away from, right? Price trading into this level should now facilitate expansion at least into this blue box. We don't need the whole high to get run. We just need that small move on the monthly time frame, that monthly candle to facilitate, multiple weeks worth of buys. Now, let's see what this looks like on the 4-hour chart. And here we go. So you can see if we mark out the monthly open, which is February, it would be Wednesday, sorry, Thursday. Here we are, right? At 1800, this is the opening price. I'm going to put that in an orange color. So what happens is we open quite far away from this key level, and currently on the 4-hour, you can see that price is in a downtrend, right? We are trading beneath up close candles. Then we're trading back into them, distributing lower, sweeping highs, right? This is a bearish order flow. We are sweeping highs and continuously closing beneath these levels of up close candles. And then what happens? Price rallies higher. We get another manipulation on a higher time frame, right? Perhaps the daily, this is a cleaner manipulation. And then we have this key level, that monthly order block, right? We go back, this monthly order block that we had marked out. So you can see here on the daily, very nice bearish order flow. Nothing here is breached, right? We're trading above previous day highs, trading lower, very clean. On the 4-hour, you can see that order flow is also carried out all the way until this level. Now, understanding the daily order flow is bearish, the 4-hour is bearish. We're delivering to some sort of key level. What key level? That monthly level, right? The monthly order block. Then trade into that level. Let's delete this now. We trade into that level and we want to see, is price willing to sponsor this move at this level? And yes, it is, right? We get a very nice displacement, creating an inefficiency as well. As you can see from this candle's low to this candle's high, this is a fair value gap. We then trade back into this level to support expansion way higher. Now, understanding that this is the monthly opening price and the first 1, 2, and 3 weeks have declined lower, this becomes a mid candle reversal. But not only that, look at when this happens. So we understand this is the middle of the month, but this is also the middle of the week. It happens on a Wednesday. So are you beginning to see how you can profile the weekly also? We're not going to touch into this in too much depth. This is going to be in the upcoming episodes. But you can see I'm showing you a mid-candle reversal, a mid-monthly reversal, right? But if you actually think about it, this is also a mid-week reversal, right? The same logic you can use on every time frame, right? Obviously, you have to be sensible with it. You can't be doing stupid things on like the 15-minute and the 1-minute chart. You know, the higher the time frame, the easier it is, and the more logic there is behind it. Okay, anyways, continuing from this level, right? We have this level of inefficiency. I would class this all as one inefficiency because there are two fair value gaps, right? So this whole area, in my opinion, is inefficient. So we trade into that, and that begins the expansion to the upside. So now all you are doing is buying fair value gaps, buying gaps in the market, hoping they support price higher towards our draw on liquidity, being that monthly opening price, right? The beginning of the month has already set up the sell side of the curve. This is all a manipulation, the sell side of the curve, to set up the market maker buy model, right? The buy side of the curve. So every time we are running beneath a low, we are also seeing this as a manipulation. This is a chance for you to add orders into the market, right? This is a chance for you to buy the market to the upside. And again, what's happening here? We create these lows, right? And we sweep them. We sweep all of these lows into this level, and then we expand higher. And that gives us what? A whole week's worth of bias. Once you see, for example, this week here, right? So the final week of the month has expanded very early on, right? Monday and Tuesday. And then what happens? We get a consolidation phase of price, okay? And then what happens? Thursday trades back lower. But is this a reversal? No. we understand this is a key level, right? And the market overall is bullish. So Friday should still, in theory, continue that expansion towards this original consolidation, which rests just beneath that monthly opening price, right? So what happens? Again, we manipulate and we get that large expansion to the upside. It's very important you don't get caught up in these moves and discouraged, and you're able to understand that this is just a new phase of price. I'm not going to touch in too much depth about phases of price in this series. I will release videos on this in the future and how to anticipate um, basically fake reversals versus when you're on side, etc. Understanding when a market is likely to exhaust versus expand. But yeah, so that's pretty much it. That's the logic, and you can see how you can frame 1 week and 2 weeks worth of bias from this move. But then what happens here, right? The new month opens. But do you remember what I just taught you guys about the classic expansion month? Is this not a classic expansion month to begin with? The monthly candle opens, and the previous month has anchored a low for price to expand away from, right? Obviously, this is the low of the month, but it has anchored this short term low for price to trade away from. We are referencing now a buy model external to this month, right? Which isn't marked out yet, but there's a buy model, which is this one we're currently trading within. This is the sell side of the curve. We are referencing that in this current month. So this becomes a classic expansion month, right? Just until these highs and these highs at least. But you are beginning to see how this all shapes together and how you only need to categorize price into these two profiles and you can make a killing. I hope you're beginning to understand how I've really simplified this process and how I view the markets, right? In a very logical, clear, distinct way. I've removed all of the overcomplication and we've categorized the markets into two simple profiles. And in the following episodes, I'm going to teach you how to fractalize this and master this. So, with all of that being said, that does conclude the first episode of the profiling series. I hope it has been useful and I hope it did make sense to you. If it wasn't too clear, feel free to contact me via X, Instagram, or even feel free to join my Discord server where we can all learn together as a community. And I will be giving you guys guidance for completely free. Thank you once again, and don't forget to subscribe and drop a like on the video if you want me to continue putting out this content.